Morning, everyone, and welcome to Genex Power's Q1 FY24 Investor Webinar. My name is Saskia. I'm part of the Investor Relations team, and I'll be hosting this call. With me today is Genex CEO Craig Francis and CFO Patrick McCarthy. At this time, all participants are in listen-only mode. A Q&A session will follow after the presentation. If you wish to ask a question, please type your question into the Q&A box and I will read it out. This call is being recorded. I will now turn the conference over to Craig.
Thank you, Saskia, and good morning, everyone. It's a pleasure to be here to report our Q1 results for the financial year 2024. And so my first as CEO, but I'm pleased to have Patrick McCarthy, our new CFO, who joined us last week, with me, and I might just hand over to him just to give a bit of an intro and say hello.
Yeah, thanks, Craig. Delighted to join Genex, and I was announced a couple of months ago, but started last week. I'm very excited with the hydro project advancing, 99% complete on the main access tunnel, the solar operational, batteries soon to be commissioned, and some exciting new developments. My background, I've been in renewables for the last 14 years with Infigen, now Iberdrola Australia, with Macquarie Group in London for 5 years, and recently with Elgin Energy, a solar and battery developer.
Patrick, as I said, great to have him with us. So look, I'll just run through a few slides today, and then we'll, as Saskia said, we'll have some Q&A at the end. This slide just sort of gives you the corporate snapshot. The key change here is we continue to draw down on our debt as we continue to deliver the projects. Undrawn facilities at 30 September, still $145 million. And the cash has grown since last quarter. That's because we drew down on the J-Power facility, which we announced in June of last financial year. That funding was drawn earlier this quarter. So that's sitting there as we said, as standby contingency funding for the hydro project. Just jumping into to recap on Genex, for those that are new to the story. We are a pure play ASX-listed company focused on developing and delivering renewable energy generation and storage projects in Australia. That covers large-scale batteries, pump storage, hydro, wind, and solar, and we're in Queensland and New South Wales at present. The portfolio is worth over $1 billion of what we've delivered so far, and that comprises 100 megawatts in operation, 300 megawatts under construction, and a pipeline that is 2.25 gigawatts and growing. And really, the jewel in the crown is our Kidston Pump Storage Hydro project, which is the first pump storage hydro project in more than 40 years. The first to be delivered by the private sector. But really, look, we're here to do our bit for the energy transition. That's our ethos. We want to play a leading role in continuing to advance the transition. It's an enormous task that's in front of all of us in the industry, but we're wanting to row in the same direction to deliver the renewable energy targets that have been set by various governments. In terms of the portfolio, I think many of you have seen this slide before, but I will just run through what we have in place at the moment. In North Queensland, in this light green dot here, we have the Kidston Clean Energy Hub. That comprises our 250 megawatt Kidston Pump Storage Hydro project, which is in construction, our 50 megawatt Kidston Stage 1 solar farm, which has been in operation since 2017, and our Stage 3 wind project, which is 258 megawatts. It's a 50-50 joint development with J-Power, and that is still in development, targeting final investment decision next year. Further down the coast, we have our Baldercombe Battery project. It is in the final throes of commissioning. It's 50 megawatts, 100 megawatt hours. And then further south, Bully Creek Battery and Solar project, which is an up to 2 gigawatt development, solar and battery, going to be delivered in multiple stages. And again, a 50-50 joint venture with J-Power. And rounding that out is the Gemelong Solar Farm, which is 50 megawatts in New South Wales, and that has been operating since 2021. All in all, 400 megawatts of what we call our committed portfolio, that's in construction or in operation, and the pipeline of 2.25 gigawatts. So I'll briefly touch on the results for the first quarter of this financial year, and that principally relates to the solar farm performance. Total generation was up from the last quarter, which was really pleasing to see as we move out of the La Niña cycle and into an El Niño cycle. KS1 generation of 30,224 megawatt hours. That was 4.6% up on the prior corresponding quarter. And Jamalong generation of 22,878 megawatt hours. That was 19% up on the prior corresponding quarter. And what we're seeing here is better irradiance as we move out of the previous weather pattern, and also a pretty good quarter from an economic and a network curtailment perspective. Revenues for the quarter were $4.5 million, comprised of $2.7 million from KS1 at the PPA price, and no surprises there, and Jamalong $1.8 million with an average price of $77 a megawatt hour. Really what we're seeing with Jamalong is a quarter with quite significant intraday volatility. So prices really dipping down in the middle of the day when the bulk of the solar generation was occurring, which meant that the black pricing was quite low for this quarter compared to prior years. Still seeing really buoyant LGC pricing in the $50 range across the quarter, and that's still looking really strong further out. So look, I guess Jamalong revenue was probably down on where we expected it to be. We don't think there's anything sort of longer term in this. It's really a seasonal issue as you get really good irradiance this time of year in the springtime, and the demand from the likes of air conditioning and things hasn't really picked up, which it does over the coming months. So we still have good expectations that the pricing will rebound as we head into the summer months, the peak period. And obviously, with batteries coming on next year, the Waratah Super Battery, a big one in New South Wales, we expect this to be a short-term issue for this time of year. The operating cash flow of $3.5 million cash outflow, look, that was a function of lower revenues from last year, and also a few one-off items. There were a few payments that were made that usually get paid at a different time of year, as well as some Project Hector, that's the M&A bid expenditure, and a few other one-off items. So yeah, that was a negative cash outflow for the quarter, but overall we expect that will pick up over the coming months and for the full year result. And as I said at the outset, the cash position of $87.5 million, that includes that drawdown of the J-Power funding, which was completed early in the quarter. And pleasingly, a good quarter from an HSCQ managed perspective, with no LTIs and no environmental incidents. So just moving through on our committed portfolio, we've talked about this slide quite a few times of late, but it is an important slide, and it really shows that we're on the cusp of a step change in our business. We've been working pretty hard in getting this portfolio of 400 megawatts of committed assets into construction firstly, and then delivering on that construction, and we're on the cusp now of seeing the fruits of those efforts. FY24 be the first contribution of the battery. We'll talk about that in a little bit later in this presentation, but coming online next month is the intention there, and then FY25 and 26 we start to see the hydro contributing to our revenues, and that's really predictable out to 2055, really underpinned by that offtake agreement with Energy Australia for the Kisson Hydro project. But what that looks like is 83% of contracted revenues averaging $95.6 million out to 2055, and with really solid EBITDA margins averaging 73% across the projects, which means a lot of cash available for debt and equity, and really little sustaining capex, which means that cash is really distributed down. So really on the cusp now, and really looking forward to our the next step change with the battery coming online next month and starting to contribute for our next quarter. This is a new slide we introduced for the full year results, but just to paint the picture of the funding profile, and the key message here is we do have a reasonable amount of debt in the business. The bulk of that is the $610 million facility with the Northern Australia Infrastructure Facility. That's a fixed interest rate for 15 years, and with a really good concessional government lender. Otherwise, we have sort of commercial facilities in place. You see the J-Power facility there as well, which is now fully drawn. But importantly, 99% of that, the total debt is hedged out to 2027, 2030 at an average interest rate of 3.02%. And the other one to note is that we will be refinancing the senior facility and subordinate facility for the 2 solar farms next year in the ordinary course of our activities. So just moving on to the pump storage hydro project, really important project for us. It was the basis for the founding of the business back in 2014, and it continues to progress quite well. It's a 250 megawatt, 2,000 megawatt hour scheme, so that's 8 hours of storage, and it's the first pump storage hydro project in Australia in 40 years, the first done by the private sector. It's got a highly contracted revenue stream with Energy Australia for up to 30 years, and that's growing with a fixed and floating indexation rate, underpinned by a long-term concessional loan from the Northern Australia Infrastructure Facility. And we have a fixed price lump sum EPC contract with Connell Dowell and John Holland, so top tier contractors delivering the project for us. And as at the end of the quarter and today, we still remain on track to energise the project in the second half of next year. And the scheme you'll see here in this picture, just to give you a bit of context, the dam in the foreground is the Eldridge pit that's going to form the lower reservoir. It's really deep and full of water, and you'll see in the middle ground the Wisers pit, which has got some water in it. That will be the upper reservoir, and you see the dam starting to take shape. See, there's some black. Where my cursor is, some black HDPE liner that's going down around the circumference here, and that will ultimately be fully lined. The water will be transferred into this dam to create 200 odd metres of head, which will form the basis for the pump storage hydro scheme. Now, this gives you a plan view of the scheme and sort of explains it a bit more colour in terms of the underground works. But you can see that dam, from bird's eye view, once it's full of water, and obviously the lower reservoir being drained in the top here, and then the water will drain down where my cursor is in this intake canal through 2 intake shafts. Over on the right in the underground works, you can see 2 vertical blue intake shafts. They'll drop down 200 odd metres and take a hard right-hand turn or perpendicular turn into the powerhouse, where they'll spin some generators, spin turbines and turn spinning generators to generate electricity, then flowing out through the orange tail raises to the lower reservoir. The key change here is we've just added a bit more clarity as to the progress of the underground excavation works, and it's really pleasing to see these continue to go ahead and advance toward conclusion by the end of this year. It's really pleasing to see. We're up there this week, and it's really amazing to get under there and see all the various tunnels that have been constructed and completed now. Main access tunnel, I'm pleased to say it is 99% complete as of the 20th of October. So we expect to be announcing the completion of that piece, pretty critical piece. I'm sure lots of attention on that from the investing community in the coming weeks. But that's pleasingly looking to have been delivered without incident. The construction edits, they're all done apart from the final one, which is CA2, which will provide the access for the tail raise tunnels going back to the powerhouse. The water intake shafts, there's 1 shaft to go, and that's expected to be completed over the coming weeks, and the equipment demobilised from site before Christmas. Cable and ventilation shafts are complete, the transformer hall is complete, the roof of the powerhouse is complete. I'll talk about that in a moment. The next slide, the bench excavation is the key focus now, and that's this powerhouse is 80 metres long, 25 metres wide, and 50 metres high. And the benching excavation is basically excavating that depth. So a fair bit has gone on there, and there's still a bit to go. But again, that's all planned to be completed by Christmas. So this is a new slide we've added for the pack, just to give some context of what the underground works look like and what the powerhouse looks like. But as you can see, this powerhouse, this was taken on Sunday. It's really coming along. The completed crown here is extremely dry. No water's been observed, and that's that was been in place for the last couple of months. That we've now been focused on benching down here, so driving the depth down. You can see along the top here these cement plinths. These are the crane beams that will house a gantry crane that will run along the top of the powerhouse to assist with installation and O&M long term. And you can see here on the right just the status of excavation. So we've taken this down about 25-30 metres to what's called the operating floor level, and that's where these tunnels will enter. The main access tunnel here in the dotted red line is the permanent access and where all the equipment will come in, and these 2 tunnels here flow through to the transformer cabin next door. But we still have a bit to go. We have to take this down another 30 meters. So to construct it, to excavate the location for the pump turbines and the generator equipment. So a bit to go, but you can see it's a massive structure here and it's coming along really well and really impressive to see earlier this week. Again, we expect it all to be done by Christmas. Elsewhere, in terms of the construction update, the liner continues to progress. It was 60% for Wisers Dam, 60% complete at quarter end. The heavy equipment has all arrived. We've had 800 tonnes of the main heavy transportations arrive in this last quarter, which was really pleasing. That comprises main inlet valves, the transformers, you can see the picture here, and also the half starter units, which 4 of those, they're quite heavy themselves, 100 tonnes each. Also, the transmission piece is coming along really well. The K2H substation, that's the switching station that we will own, being constructed by Beon, is complete. Just stringing the last of the line across to the PowerLink substation at site, which is also coming along really well. And lots of towers going up, which is really pleasing to see. So that all remains on track and looking really good. And as we said, energisation is planned for the end of next year. What that looks like is fit out works in the powerhouse cavern. They'll start with that crane, that gantry crane coming in over the next month or so, but they'll really kick off in earnest in the new year with lots of fit out works as we deliver the final phase of the project, which is the fit out and commissioning of the equipment itself. On to Bouldercombe. Very busy quarter for the battery. It was really progressing with commissioning after energisation in June 2023. And we were generating commissioning pre-completion revenues during that period outside of all the testing. But we did have an incident at the battery on the 26th of September where a fire broke out at the end of a generation cycle on one of the Megapack units. There's 40 of these units, each is 2.25 megawatts each for 2 hours. So it's a modular system. One of the 40 units caught on fire at the end of that cycle. The protocol is to allow the Megapack to burn itself out. You don't use water on lithium-ion batteries. You allow them to burn themselves out, and that's the design that's been implemented for this unit in particular. And it really behaved according to design. If the fire was contained to the specific unit, it burnt out in a controlled manner over a couple of days. But it was really pleasing to see from that aspect that it behaved as it was supposed to behave. There was observed subsequently that due to the high temperatures of the exposed Megapack, there was some damage to thermal insulation for the adjacent Megapack, which is about 200 millimeters separated from the other Megapack. So what the decision we've taken is and with Tesla's alongside Tesla, is that they've shipped 2 replacement Megapacks to Australia. They're on a boat on their way. And the plan is to recommence operations with 38 Megapacks. We're in the process of finalising the root cause analysis. That should be available shortly, and we'll make a further announcement at that time. But we're getting ready to re-energise the batteries and get going with operations under the Tesla Autobidder offtake agreement as soon as we can, and that's looking like very early November. In terms of other project highlights, I think it's pretty well understood. We've got fixed price construction contracts, which are now largely complete and a fully hedged senior debt facility with Infradebt for 12 years. It's underpinned by a 20-year warranty and a 20-year O&M arrangement with Tesla. So really Tesla is there all the time to make sure this is behaving as it should and fixing things as if and when they do break. And we, of course, we have Tesla involved in the offtake with the Autobidder offtake agreement. And that's a really exciting piece for us because it gives us significant upside exposure and downside protection. And we get to use Tesla's best-in-class algorithmic-based bidding technology to maximize revenues for both of us. So pretty exciting to get going on this after the fire incident in particular. And what's important is that we have this battery online and ready to contribute to keeping the lights on in Queensland ahead of what's expected to be a pretty testing summer with this El Nino weather event hitting and driving up Temperatures, we're expecting heat waves, expecting the thermal plant and transmission network to be under pressure, and the battery will play its part in keeping the lights on and hopefully making some money for shareholders at the same time. Moving on to the development portfolio, and look, it's been a pretty exciting quarter for both of our nearer term development projects. First is the 258 megawatt Kidston Wind project, which we're developing 50/50 with J-Power. The big development here is the first offtake has been signed. That happened subsequent to quarter end. We announced that last Friday, but it's a big step forward for the project in that we've secured 30% of the project output with Energy Australia over 10 years. Energy Australia being the offtaker for our Kidston Hydro project, so really cementing that relationship with them at Kidston. And obviously, they're putting their trust in us to deliver this next project for them and their portfolio as they look to continue to support the energy transition. But that's a big milestone for us. It's not the only offtake we're looking for this project, and we're expecting more news as we advance towards commencing the financing process in the new year and achieving a final investment decision next year. Still working with Goldwind to complete the turbine supply and install contract terms and the final designs and feeding into grid connection processes and the like. But yeah, a good milestone with Energy Australia, and more to come as we continue to de-risk the project. And then on Bully Creek, we had another major milestone there with announcing our 25-year offtake with Fortescue for 337.5 megawatts. And what that does is it confirms that we'll be delivering at least a 450 megawatt solar farm as the first stage for the Bully Creek project. But importantly, we're continuing offtake discussions with other external counterparties. And what that's going to do is position us to potentially be delivering a 775 megawatt solar farm, which will represent the largest grid-connected solar farm in Australia. And really what this project is about, it's about scale and really optimising economies of scale, across fixed connection costs in terms of bargaining power with panel supply and supply of other equipment. It really enables us to be really competitive in delivering bulk renewable energy for a low cost for our offtake customers and really driving good returns for our partners. We've also commenced the procurement process for the EPC contractor, and we should have some news on that soon as we finalise that process. But this will be a full wrap EPC contract, very much the same as our other solar projects. And we think while it's a large project, lots and lots of panels and people and equipment, it's going to be pretty straightforward, and we'll be working with a tier one contractor to deliver it. The other piece is obviously the battery project for this site, and we're still looking at a 400 megawatt battery as stage 2 of this project, and that will be something that we'll be talking a little bit more about in the new year as we start to firm up the offtake discussions and engage with suppliers. But the first stage being solar of up to 775 megawatts is targeted for a final investment decision next year. What that means is, again, like the wind, the financing process kicking off in the new year, and really, that means we're going to have a lot more news flow on this project as we continue to de-risk and get ready for that process. And in particular, locking down that second offtake is a key milestone for us. We've added into the deck this new slide because I think it's very important to continue to get this message across as to how we're looking to finance this development pipeline. There's two pretty significant projects, Kidston Stage 3 Wind and Bully Creek Solar, and we really have a set strategy to deliver the funding for those projects. Since the Baldercombe project, we've really been focusing on larger scale projects, which gives us flexibility to fund the projects at the asset level rather than relying on GenX shareholder equity. So that's a very deliberate strategy from GenX, and that's the way we've been approaching our development portfolio. The first part of that is really securing attractive project finance terms, and that is underpinned by the long-term offtakes that we've secured already with Fortescue and Energy Australia, and the other offtakes that we're continuing to engage in with other counterparties. But really looking at tier one counterparties, which is going to drive that strong appetite from debt and equity for these projects to make them really high quality projects and stand out from the rest. We've de-risked the funding requirements already with our joint development agreements with J-Power to contribute to development funding and also financial close equity funding. So that's an important part. It leaves GenX with a 50% equity requirement. But really, the approach we're taking is one where we are looking to engage with third-party equity investors to sell down further interest in the project to help fund the equity requirement in addition to the project finance. The debt advisory mandates that we've got in place also include an equity advisory process. So we'll be running equity concurrent with debt through engaged financial advisors, with the idea that this third-party investor will be able to contribute funding, will be able to contribute a development premium to Genex and J-Power, which will in turn allow us to retain a shareholding in the project, but diluting ourselves at the project level rather than the corporate level. That will give us cash flows from the project and our project equity, but importantly, we'll also be earning revenues from managing the construction and the development phase through asset management agreements. So that's the structure that we're really pursuing for these two projects, and continuing to ramp up from next year alongside the debt process. So really looking forward to getting started on those process once we've locked down all the offtake and agreements and kicked off the debt process. Just in terms of the industry backdrop that we sit in, it hasn't changed much since we last got together at the end of the financial year. But really, this energy transition is happening, and the urgency is becoming more and more apparent. And what that's going to see is the more rapid exit of coal from the system and the replacement of coal with solar, with wind, and importantly with storage. And really, the way we see the opportunity here is coal exiting the system is going to drive volatility. It's going to drive those price signals for storage, and that's where projects like the Baldercombe Battery project will be profiting and filling that void. But also, it creates substantial opportunities for Genex to deliver on its pipeline and beyond that pipeline. You know, what the transition is in need of is high quality teams and you know, groups of companies that have a track record of delivery, and that's what we think we bring to the space. And certainly that's, you know, and we're seeing it now. You know, that's going to drive demand for offtake, demand for debt funding, and also for equity funding. So the bottom line is I think we're really well placed for the energy transition and to play our bit increasingly so as it moves forward. In terms of our strategy, you know, it's really been a process of getting our operation assets up and running and delivering on the construction of the rest of our committed portfolio, Kidston Hydro and Baldercombe, and that will be fully delivered by early 2025. And then leveraging our position in the market and the relationships we have with key players, you know, funding providers, strategic investors, network service providers, and the offtake and supply communities to deliver beyond that, you know, our 2.25 gigawatt pipeline. We're in the process of delivering it with the 258 megawatt Kidston Wind, 775 megawatt Bully Creek Solar, and 400 megawatts of battery at Bully Creek is the next phase. And what that'll do is see us more than triple the capacity of the portfolio in the next 2 to 3 years. So a really exciting position to be in and time for the business. And look, we're not stopping there. We're looking beyond that. We're looking at other BESS opportunities, other pump storage hydro, and where we think there's attractive opportunities in solar and wind and other technologies as they mature. So I think Genex is in a really good place, having built the portfolio to where it is and what our outlook is looking like. So just to summarise, you know, we've built a pretty diverse 400 megawatt portfolio of wind, solar. Wind is a development pipeline of solar, battery, and pump storage hydro, and looking to add to that with wind and further battery and solar projects. We've got a great ESG record, really good focus on environment, community, and the communities in which we operate. And obviously being in this sector and playing our part in the energy transition is a really important piece for us. We're really establishing this proven track record of delivery with you know, nearly 150 megawatts now, with the battery coming online of operating projects, and the pump storage hydro still on track for energization next year. So that's proving more and more valuable and seeing us, you know, really get good engagement with counterparties who are trusting us to deliver their renewable energy requirements over the long term. And you know, that flows through to our strong relationships with the tier one stakeholders that I mentioned. 83% contracted revenue out to 2050 is a pretty enviable position to be in. We do have merchant risk, and that's very strategic, but largely we have contracted revenue streams. But as I said, yeah, improved exposure to the exposure to these improved pricing dynamics. That's where we have taken merchant risk in places like Bouldercombe. So we do have, we think, lots of upside in that portfolio on top of that contracted revenue stream. But yeah, I think, you know, really good position for the business at $1.1 billion portfolio, 400 megawatts, which we're delivering and will be delivered by 2025, and significant upside from there with wind, solar, and battery pipeline opportunities, which we're continuing to progress to de-risk, and there'll be lots of news flow on that over the coming weeks and months. But that's sort of it for the presentation. So Saskia, do you want to?
Yeah, great. Thanks, Craig. So we've now entered the Q&A session. Please type your question into the Q&A box at the bottom of the screen and I will read it out. So our first question is, the Bouldercombe Battery project was undertaking power price arbitrage prior to the fire incident. Are you able to elaborate on how much revenue was generated during that time?
Yeah, look, it was running a very a basic arbitrage strategy, charging for a couple of hours in the middle of the day, absorbing some negative pricing and discharging in the evening peaks. We haven't disclosed what that number, what that revenue looks like. It was a modest number, and it was really used to contribute to construction contingencies. The way it flows through the accounts during construction, it's billed as pre-completion revenue, which gets netted off capex, so it doesn't flow through to the revenue lines. But look, a couple $100,000 is the guidance.
Thanks, Craig. Our next question is, with the BBP, is there an ability to expand the site's capacity in megawatt and megawatt hours?
That's a really really good question, because there in fact is. The land that we have available and the planning approvals provide for 100 megawatts and 200 megawatt hours. So there's absolutely an opportunity for us to double the capacity at Bouldercombe. That's something that we are considering in the background, and certainly an option for us going forward. We also have obviously the Bully Creek battery project opportunity as well. We can do much larger scale capacity there. So yeah, lots of optionality for us in the battery space.
Thanks, Craig. Our next question is, can you confirm that with the offtake agreement entered into on the wind project is through the joint venture entity rather than each joint venture partner marketing their share independent of each other?
That's correct, yes. So the entity that's contracted the offtake, it's K3W Project Co. as trustee for K3W Project Trust. That is the entity that will ultimately be held 50-50 by GenX and J-Power, and obviously be welcoming a third-party equity investor as part of that equity sell-down process that we discussed earlier.
Thanks, Craig. Our next question is, given the question marks over the technical and financial future of hydrogen is still not clear, is it reasonable to assume the production of energy for Fortescue can be directed elsewhere? Yeah, look, this is something that we've been grappling with over the last more than 12 months, really, as we've been engaging with Fortescue. And obviously there's a condition precedent for Fortescue to reach final investment decision on Gibson Island as its first green hydrogen and ammonia project by the end of this year. We see it sort of going a few ways. They'll either satisfy that by reaching FID, and I think that is their plan, or they will waive the CP, in which case we have a binding contract and they'll be using the energy elsewhere. They may very well allow it to lapse, but we think that's very low probability given we're so close to that time frame. It's literally a few months away that they have to make that decision, and really we question why they'd be signing an offtake agreement with us only to allow it to lapse a couple of months later. Thanks, Craig. Our next question is, will an effort be made to retain the pumped hydro workforce who can transition to the wind project? Yeah, look, there's certainly synergies there in terms of people continuing on for that project. At GenX, you know, we've recruited a very talented project management team for the Kidston Pumped Hydro project. It's a team of 5 people, but they're highly competent and doing a fantastic job. And it's very much our intention to retain them to stay on and manage the delivery of the wind project, having spent 4 years at Kidston and knowing the area well and running the camp for the contractors, and I think we're really well placed to keep that team. As to what the construction contractors do, I'm sure they will
they will look to try and utilise the existing workforce that's up there, and I'm sure they'll have great success in doing so.
Thanks, Craig. Our next question is, I note that KS1 is currently not curtailing generation as aggressively in periods of negative spot price as compared to JSP. Is there a plan to implement a curtailment strategy for KS1 in the short term to mitigate some of this negative exposure before K2H is operational?
KS1 is under a power purchase agreement with the Queensland State Government. It's got 15 years to run. And we're complying with our obligations under that agreement to maximise generation, but also to balance that with negative price exposure for the off-taker. What I can say is that, you know, we're not really exposed to the negative price risk unless we are curtailed, but otherwise we get paid whenever we generate the full $88. So what we're doing there is complying with our agreements and maximising revenue for GenX.
Mm-hmm. Thanks, Craig. Our next question is, what was the financial impact to GenX, if any, of the Boulder Cone West fire incident?
Yeah, we'll have more to say on this when we announce the root cause analysis, but in our quarterly we put out today, we were pretty clear that the replacement of the Megapacks will be at Tesla's cost, and we're expecting that will extend to all the other costs that have been incurred as a result of this event. So we're not expecting any real financial impact, potentially, you know, some modest loss of revenue for a few weeks of delay, you know, but I guess our guidance has been that we bring this project online by the end of October. We're now adjusting that with our announcement today that it will be early November, but we're talking days, not weeks. So I don't think there'll be a material cost impact for GenX.
Thanks, Craig. Our next question is, are there any penalties for GenX under the WIN PPA if the financial close milestone is missed in 2024?
No penalties. It's really, and that's pretty standard for these sorts of processes. The off-takers are taking the risk that we'll deliver the project to financial close. They don't take that risk lightly, but there's no penalties for us. So really, we've got the trust of our counterparties, in this case Energy Australia, but also for Bully Creek Solar with Fortescue. You know, really the trust that we're going to deliver these projects and get them fully funded, fully committed, and into construction by the end of next year.
Thanks, Craig. Our next question is, with the solar pricing in New South Wales, is a battery addition a possibility at Gemalong?
Look, it potentially is. It's something we've looked at in the past, and you know, we'll continue to factor into our thinking. But again, you know, we're not jumping into decisions on, you know, based on, you know, a poor quarter here and there. Pricing is, you know, merchant pricing is by its nature volatile, it's seasonal, and we'll be making those decisions based on the long-term view on pricing. So as I said, when we're looking at the refinancing, we'll be looking at all options, including PPAs, but that may also extend to batteries.
Thanks, Craig. We've had a few follow-up questions on the BBP. The first one is, the Megapacks have temperature sensors. Why have 38 out of 40 been offline for 1 month? Yeah,
I think it was important for us to make sure when we do bring the battery back online that we're doing it safely and that we're not risking any further damage to the unit. So it was really important to undertake that root cause analysis and get it to the point where we're at today, where it's largely finalised. We're not seeing any systemic issues across the Megapacks. We still await the final report from Tesla, but that's the view at the moment. So we're not in a rush to get this battery online until we've got that root cause analysis. We've reviewed it and are comfortable with the findings and the mitigations that are being recommended to be put in place before we re-energise. So that still remains the plan. As I said, it's still, you know, and the feedback informally is that we will be able to commence safely and expediently with the 38 Megapacks. So that's what's formed the basis of our guidance today.
Thanks, Craig. Is there an insurance aspect to awaiting the root cause analysis report?
Look, there is project level insurance, and that would extend to fire incidents, but that's not really factoring into our process here. It is more about understanding what the cause was and what mitigations are required to prevent it happening in the future, if indeed any are required. We still need to get to the bottom of what it precisely was and make sure that it won't happen again. But as for insurance, it is available. Whether it will be called upon or not, I can't confirm at this stage, but only that but we're expecting that Genex will be kept whole by Tesla in this whole process.
Thanks, Craig. The next question is, does Tesla or a third party insure Bessie?
We have project level insurance for our batteries, so construction insurance, and that will move into an operational insurance. So yeah, each project, and that extends not just to batteries, but also to the hydro, to our solar farms. We procure third party insurance from the market, which is part of the construction capex, and that will cover the operation, the physical works during construction, and then the operations once we get into the operational phase.
Thanks, Craig. Final question on the BPP. Has Genex fully paid for the plant, or what retention is held?
No, we haven't. The final milestone is payable to Tesla on facility commissioning completion, and that is a milestone that is yet to be granted. So we're working through what the machinations of that look like with Tesla, given we're looking to commence operations with 38 megapacks. I expect to have a bit more news on that over the next few days as we finalise those arrangements with Tesla.
Thanks, Craig. Our next question is, I wonder if it would be possible to see more photos of project progress on a more regular basis, say every 2 or 3 weeks.
I will note that request. I guess look what we're trying to use our, obviously the ASX platform is for material disclosure. We don't want to be putting out announcements every couple of days or weeks. We reserve it for more material updates, but we are using our social media platforms to put out news flow on the project. There was a post recently with the big kit arriving to site. I did take a video earlier this week, which I'll be passing on to our comms team to put up there to show what the underground workings look like. So I take the request for more material, and we'll look to ramp that up as best we can.
Thanks, Craig. So there are no further questions. I'll now hand back to Craig for closing remarks.
Thanks, Saskia. Look, just want to thank everyone for their time this morning. It's a pretty exciting time for the Genex business, and it's really good this last quarter to have been able to talk to and bring news of the work that's been going on in the background on our development pipeline, which is really, it's a very real pipeline, and there is lots happening there, and expecting lots more news flow over the coming weeks. And also pleasing that we continue to deliver on our construction projects to really get that 400 megawatts of committed portfolio into operation and into contributing to the Genex bottom line for our shareholders. So thank you, everyone. I appreciate your time, and look forward to the next webinar after our half-year results sometime in February.
Thanks, Craig. That concludes our webinar for today. Thank you for participating, and you may now disconnect.